Hello everyone and welcome back to Explain the Charts. Today, July 22nd, 2025, we're undertaking a crucial deep dive into XAUUSD, or gold, examining both the impactful current events and the intricate patterns on its charts. Recent headlines from major financial outlets like MarketPulse and TradingNews.com are buzzing about gold's strong ascent, with some even questioning if it will gain acceptance above the $3,400 per ounce handle. Just hours ago, reports indicated gold climbed to $3,430 per ounce amidst rising trade tensions, signaling a potential breakout ahead. This aligns perfectly with analysis from FX Street, which points to rising trade tensions, Federal Reserve uncertainty, and a weaker dollar as key drivers behind gold's strengthening position. Adding to the bullish narrative, Goldman Sachs Research, in an updated forecast from October 2024, projected gold prices to hit $3,000 per troy ounce by the end of 2025. They even revised this upwards to $3,100 later, following a more than 40% surge since January 2024. The primary catalysts for this robust outlook are the significant increase in purchases by emerging market central banks and a return of Western investors seeking to hedge against potential geopolitical shocks, trade tensions, and U.S. debt fears. Gold's role as a traditional safe haven asset, especially during times of economic instability, is consistently highlighted, amplifying its appeal in the current uncertain global climate. Now, let's turn our attention to the charts to see how these fundamental drivers are translating into price action. Looking at the daily chart for XAUUSD, we can clearly see the powerful long-term bullish trend that has been in play since March 2024. Gold has systematically breached significant psychological barriers, notably breaking above $2,500 in August 2024 and then impressively crossing the $3,000 mark in March 2025. This rapid ascent well past Goldman Sachs' initial $3,000 year-end target, set back in October 2024, underscores the strength of this rally and suggests their forecasts were perhaps conservative. Observe the candle on October 30th, 2024, where gold was around $2,785, and despite a slight dip after Goldman Sachs' updated forecast, the overall trajectory has been strongly upward. The April 2025 period shows a significant peak, reaching a high of nearly $3,499.45, establishing a strong historical resistance level. However, this was followed by a sharp correction, including a notable drop on April 22nd, illustrating volatility around the $3,400 region as the market struggled to sustain above this level. Fast forward to the current period in July 2025, and you can see a renewed strong push, with the latest daily candle on July 21st showing a significant upward movement, briefly touching $3,402.31 and closing strongly at $3,396.42. This confirms the news reports of gold climbing to $3,430 and striving to break above the $3,400 handle. To get a closer look at the immediate price dynamics, let's zoom into the 15-minute chart, specifically focusing on the trading activity from July 17th to the present. Here, you can clearly observe the relentless short-term bullish momentum that propelled gold from the $3,340 range to its recent high. Each green candle on this chart represents consistent buying pressure, reinforcing the idea of a pennant breakout, as mentioned in some news headlines. The recent attempt to breach and hold above the $3,400 level, although not closing above it on the daily chart yet, indicates strong buying interest at these elevated prices. Immediate short-term support on this timeframe appears to be forming around the $3,380 to $3,390 zone, as buyers stepped in quickly during minor pullbacks. Conversely, the $3,400 to $3,402 area is acting as the current immediate resistance, representing the price point where upward momentum paused. Traders should watch for a decisive break and sustain above this $3,402 level on higher volume to confirm a strong continuation of the rally. A failure to break this resistance, however, could lead to a short-term retest of the $3,380 support or even lower levels if selling pressure increases. So, what are the reasons to be bullish or bearish on XAUUSD, and at what points? On the bullish side, the macro environment is highly supportive. Persistent central bank gold accumulation, escalating global trade tensions, ongoing concerns about U.S. debt sustainability, and the anticipation of Federal Reserve interest rate cuts all act as tailwinds for gold. Technically, the long-term uptrend is undeniable, and recent pushes towards significant resistance levels suggest strong underlying demand. If gold can decisively break and hold above the $3,400 mark, the path to the April 2025 high of around $3,499 becomes clearer, and even $3,500 could be within reach. A sustained close above $3,400 on the daily chart would be a strong bullish signal. Conversely, reasons to be bearish, or at least cautious, include the potential for significant profit-taking after sharp rallies, especially if global tensions de-escalate or if the Federal Reserve indicates fewer rate cuts than currently anticipated. Goldman Sachs' downside risk scenario of only reaching $3,060 by year-end if Fed rates stay flat highlights this vulnerability. Immediate short-term bearishness would be reinforced by a strong rejection at the $3,400 resistance, leading to a break below the $3,350 support. A breakdown below $3,300 on the daily chart would signal a more significant short-term reversal, potentially targeting the $3,200 to $3,250 range. To recap the important price levels to watch, the immediate resistance is around $3,400 to $3,402, with the all-time high from April 2025 at $3,499.45. Immediate support is currently around $3,350, and a more critical psychological support stands at $3,300. For short-term outlook, there's a high likelihood for XAUUSD to retest and potentially attempt to sustain above $3,400 in the coming days. This likelihood is reinforced if trade tensions continue to escalate or if any Federal Reserve commentary hints at a dovish stance. For the medium to long term, there's a good likelihood of gold continuing its climb towards the $3,100 to $3,300 range, as predicted by Goldman Sachs, and even pushing higher towards previous highs. This prediction is strengthened by consistent central bank demand and ongoing global economic and political uncertainties. However, there is a moderate likelihood of significant pullbacks if unexpected hawkish signals emerge from central banks or if geopolitical risks subside notably. Looking ahead, keep a close eye on upcoming Federal Reserve announcements, any new developments in global trade disputes, and reports on central bank reserve changes. Volume analysis on any breakouts or breakdowns will be crucial for confirming the sustainability of price movements. Understanding the underlying macro narrative is just as important as reading the chart when deciding when and at what price to trade gold. Remember to manage your risk and stay informed. Thank you for watching Explain the Charts, and we'll see you in the next analysis.